Welcome back, everybody. I hope you've enjoyed today's fantastic plenary sessions. I'm delighted to be joined in the studio by Tina Fordham, Geopolitical Strategist and founder of Fordham Global Insights, and Wendy Cromwell, Vice Chair and Head of Sustainable Investment at Wellington Management. Welcome both.
Thank you.
So you just took part in an absolutely fascinating session on geopolitics, and we really wanted to continue the conversation here for you, our virtual audience. We're going to be submitting your questions to Tina and Wendy, and you can submit these using Slido. You can find this on the right-hand side of your screen. Just select Live Studio when you submit a question. And if you can't see Slido, just make sure you minimize your view and you'll be able to see it. So thank you so much. So much to talk about from that fantastic session on geopolitics. Tina, can I start with you? You talk to a lot of C-suite leaders, and you have for a really long time. What is it they're asking you about at the moment, and how has that changed over the last 10 years?
Thank you. Well, I've been in this business for about 25 years, advising investors, business leaders, government leaders. I've been an advisor to the UN, talking about geopolitics and global affairs, let's say. And the nature of the questions being asked has changed enormously during that period. We went from a time where investing in emerging markets and new opportunities was the most important consideration, and it was in the peak globalization period. Then we had the global financial crisis, the pandemic, the invasion of Ukraine, and this kind of period of once-in-a-generation crises that I talked about during the session. And I think it's left a lot of business leaders kind of wondering what is normal. For a while, the McKinsey term of the new normal was popular. That has fallen out of favor because it feels like there's no normal. And what I was trying to get at during my remarks was really to consolidate these 25 years of observations, which is that a lot of what we grew up with professionally, the idea of, convergence around a series of norms and international institutions, has been interrupted. We are in a period where it feels like there is more change, but we haven't changed to something else. In political science, we call that a paradigm shift. But we're in a sort of an interregnum, if that makes sense. So in closed door conversations with business leaders, a lot of what they want to know is really, how do I prioritize? Where do we go from here? Because there is a strong sense of not being prepared for the current moment. When it comes to geopolitics, which is kind of a broad term, I do end up touching on ESG and sort of corporate, social, political responsibility issues as well. I think a lot of leaders feel like they were doing what they were supposed to do, and now all bets are off. Now all the rules are broken. So if that resonates with anybody who's watching, I can tell you that you're not alone. There's a great deal of confusion about what the bottom line is, what the deliverables are, and even what the kind of divergence between your staff and your shareholders and your customers, because expectations have changed a lot. And I think that sense of change really accelerated post-pandemic. And what I try to do, and that, the various terms that I threw out during my presentation, one of them I talk about is raising your political quotient. It doesn't mean that we should all become news junkies. In fact, the opposite. I encourage people not to watch television news because it's not going to help you make better decisions, but to cast a wider net in terms of the factors that you're looking at and thinking about and how they're going to impact your business. Long answer, sorry.
No, great answer. And you talked on stage about the idea of the zeitgeist leader and being prepared. Is this part of it?
Yes, and I developed this methodology and approach over a period of time, partly because I realized that people end up getting a little bit depressed if they haven't thought very much about the global environment. And so it's not enough. And anyone who's in a risk function will appreciate this. You do need to to give people some, some inspiration, something to aspire to. And so we developed this idea of raising your political quotient and what that means. And part of it is just getting rid of the shortcuts that a lot of us, might have learned in business school. And a lot of that is stereotypical thinking.
Emily, from an investment perspective, a lot of what Tina is saying really resonates with me. We have to invest across countries and asset classes. So we're trading rates, we're trading commodities, we're trading companies that rely on commodities and supply chains, and really understanding the political quotient or the geopolitical situation is critical to making those investment decisions.
And yet, how do you do it? There have been some efforts to develop some sort of quantitative screens and measures and things. I mean, that's something that I could talk about for a long time, but there hasn't yet, in my view, been a really compelling, offering to help with that, to say, here's the number that you drop into your model. And so because it's difficult to quantify, the temptation is to just leave it out of the equation. And that's not the right answer either.
Such an interesting point. Wendy, coming to you on the ESG theme then, given all this geopolitical instability and perhaps this is a new unstable normal, what do you think is the impact on companies prioritizing ESG factors? Is this getting in the way, or is it actually making them focus on it more?
It's a great question. I think, and we started to talk about this a little bit in the fireside chat portion of the talk. I think the focus on supply chains is real. I think the focus on deglobalization or friendshoring, or choose your favorite word to describe
Shortening
it.
the supply chains. Do we have a term for that? Yeah.
And then this idea of great power competition, and also the fact that countries are going to prioritize national security over economic efficiency is really getting into the conversation at my firm, and I'm sure at other investment firms. And then the way that we think about that with the companies that we invest in, and I think the way that the companies think about it, what we like to see is that they're not doing ESG for ESG's sake. They're doing it to build resiliency into their own corporate strategy or business strategy. So supply chains and supply chain resilience, that's another word if you're thinking about energy transition, that's scope 3. And so really thinking about upstream, downstream, scope 3 emissions, where you have reliance, where you have where you might be affected by disruption is really important. And then bringing in, on the other side of climate, bringing in physical climate risks, as we're seeing with Milton and Helene just this week. Do you have exposure there? I was just reading through my notes on my phone, and there's a big discussion. Do any of our banks have exposure? Is there undue exposure from the regional banks into this area, or is it more in these companies? And investors really trying to figure out which companies are more prepared, and in the last panel, more diversified, have diversified their risk, versus which are less so. And I think that's the way that these two things really intersect.
The resilience term is going to be much more effective, I think, at communicating what companies want to be doing and need to be doing. I try very hard to get away myself from geopolitical risk. You can say geopolitical resilience, but it's really about building systems that can withstand more shocks and more pressures. And that means moving away from the idea that you can kind of, have the same plan and the environment will remain intact as you've been used to. That's never been the case. And that's why I made the point about the period between 1989 and 2007 being the most peaceful and prosperous in history. It was unusual. It was extraordinary. We have more friction. We probably also have new and different opportunities as a result. And we have to retrain our minds to think about it that way.
And how far do you think leaders have progressed in making that mental shift and accepting how things are now?
Well, if you look at the data about what they say, I mean, for example, Jamie Dimon said last week, I think, that geopolitics was the number one concern. And yet, if you ask people what they are doing about that, it's a tiny number. And I think that speaks to the point I made about the difficulty in quantifying. If you look at the expertise sitting around on a board, you've got people mainly with accounting backgrounds and financial backgrounds. There just isn't the expertise there to say, let's take some of these macro indicators and add them to the funnel of factors that we are looking at when it comes to our business resilience. And yet it has to happen. I think business leaders need a mental map. And instead, if they are thinking about geopolitics, they're usually bringing in a retired general or ambassador once a year to give a lecture that everyone enjoys, and they get their picture taken with the famous guy, and that's it. And that is not looking at your business through a geopolitical lens or an ESG lens. And these two sort of sets of factors are very related in that they're hard to quantify. Everyone knows they're important, and it just takes more concerted effort, which has to come from the top.
Again, coming to the investment side of things, because I think we have, complementary viewpoints. What I see is 10 years ago, many investors would say, I'm a bottom-up stock picker. I don't think about geopolitics. I don't think about macro.
That's right. It's not in the P&L. It doesn't matter.
I'm a bottom-up stock picker. But I don't think that they say it in that way anymore. I think they had the luxury of saying it in that way then because of the geopolitical stability.
It was a luxury.
Right?
It didn't impact asset prices.
Right. So we were in a very stable environment. So you could be a bottom-up stock picker. And now you see them trying to price political instability, trying to price what's going to happen with policy changes. I mean, when the IRA came out, people were like, okay, which companies are going to benefit from this?
That's the old school way of doing things, though. That's the way we used to look at U.S. elections. People say, okay, give me a list of companies that are going to benefit under presidential candidate A or B. It's a lot harder to do now.
And the issues are maybe bigger.
Yes.
So you mentioned, Tina, the middle powers, and we've got a related question from the audience. How significant is India going to be in the geopolitical landscape in future? And that's to both of you.
Well, I mean, sort of approach A, let me get out my crystal ball. But the question, the way I'd phrase that is, how influential does India want to be? And how much political capital and economic capital can India bring to bear? That's how you think about that question. India is a powerhouse that as yet has not realized its potential. But we can look at the path that China has taken and also see, the setbacks and the missteps. In all of these cases, investors like to hold on to a narrative. Remember that China was going to overtake the United States or whatever it might be. And nonlinearity, I'm sorry, friends. I mean, the path is always nonlinear. So India under Modi is growing leaps and bounds. It was fascinating in this year of elections to see how the market reacted when Modi's party was reelected, but by a smaller margin than was expected. It was fascinating to me because I felt that investors were falling into the same trap of this kind of, rise, this linear rise that was not going to be interrupted. The Indian people in that case, dealt a bit of a setback to the leadership and said, we like some of what you're doing, but not all of it. And I think that's a great object lesson or case study for us this year, is that there isn't a magic story that is going to replace what investors thought the China juggernaut was going to be.
When I think about India, I'm going to bring it back to the great power competition that we've been talking about between the U.S. and China. And when I look at emissions, China is the top emitting country. The U.S. is second. India is third. India is going to need solutions and technology. And Tina has highlighted how much friction there is between China and India, first and third. And so might India use its economic muscle to invest with the other second highest emitter, but in terms of the technology and promoting the solution. So I think that's an economic muscle they could.
That's a great example, by the way, of taking my kind of top line statement. I call it the ick in BRICS, India and China not getting along. And you've just taken it to the next level, which is, what do they do in that case? If India and China don't trust each other and they're in competition, where do they seek to develop their relationships? Because the commercial ties, will follow. India can do all kinds of things. It's obviously a great power, but I don't really see myself as being in a position to kind of champion country A or B, because, if you take the long-term view, it's not just dependent upon leaders, it's dependent upon circumstances. I mean, if you're the prime minister or the president, you need to be a zeitgeist leader too. You don't get to choose the circumstances.
Do you think there has been a change in political leaders and whether they are thinking more that way, or whether with elections of maybe more populist candidates that's changed?
I don't know. I have to be diplomatic. I mean, I think we've seen a decline in the competence and the quality of leadership. That's probably not a very controversial statement. I also think that public expectations from government have risen, dramatically over the last couple of years. And one byproduct of the pandemic, I believe, and this is around the world, is that people expect more from government to kind of fill the gaps, and not just in the most basic terms of security and economy, but to mitigate all types of crises and setbacks. I'm not sure that leaders have either the individual capability, but also the legitimacy that you get from having a majority. Divided populations and polarization also, by extension, means that a lot of people are going to feel like whatever that leader does, if it's not the guy I voted for, it's not a good solution, and that's challenging as well.
Wendy, we're talking a lot about risks in this conversation. We have a relevant question here. What is a risk relevant to ESG investors that you think isn't getting enough attention?
So, and I think this will come back to geopolitics as well. There's been a lot of focus for a long time on climate and mitigation and transition risks. And there's been less focus on physical risks and adaptation. And when you start to follow the military complex, even at least in the US, the Pentagon, you can see that they're very, very focused on physical climate risks and adaptation.
It's a national security risk.
It's a national security risk. Yeah. They call it a threat multiplier. They're talking about what it does to the competitiveness of one economy versus another, and how they're going to invest in it. And I think that's really people are starting to talk more about it now. But if you look at go back to strategy, if you look at the investment strategies that we have out there, 90% of the climate strategies are focused on transition. 10%, if that, are focused on adaptation. We need adaptation solutions, and we need to invest in adaptation solutions. Going back to India recorded, I think it was in July, don't quote me on that, 126 degree, I'm from the US, Fahrenheit day, wow. Okay? 126 degrees, aircon can only reduce temperature by about 20 degrees. So we're getting to 106 degrees Fahrenheit with aircon, and the air conditioning penetration in India is 10%.
Wow.
So how are we going to grapple with that, and what does it mean if we don't? I think we're probably going to invest in such a way, and governments are going to invest in such a way to allow their population to survive, hopefully thrive, and then we're going to have to think about the consequences on the other side, where people have been more focused that increases the emissions because we're investing in aircon in India so that these people can survive in a changed climate. But if we don't, threat multiplier, political instability, more climate migration, more wars. Yep. It's a problem.
And how do you deal with collective action problems at the national level when nation states are my point about dealing with one problem at a time. This is a huge challenge, and of course it's where international organizations like the UN and others come in to help provide solutions and forge cooperation where national leaders may fall short on their own.
Widening that question out, not just to risk for ESG investors, but in your experience, Tina, what are the upcoming risks that you think are being underestimated by leaders?
Well, leaders don't think about risks. I'm not a political party person. I only once worked for a government as a senior advisor, and this was in the UK in the Prime Minister's Strategy Unit. And we worked on a project which was quite forward-looking. It was called Investing in Prevention. And what we did was to map these kind of risks that people weren't thinking about. And long story short, it was dead on arrival. And I learned a valuable lesson. I mean, this was 20 years ago, but I learned a valuable lesson, which is people who go into government do it so that they can give things away. They want to solve problems. They don't want to take things away. And they're not really incentivized to preemptively avoid problems. And also, I think just the personality type of someone who goes into government is probably quite optimistic, so kicking the can down the road because you don't think that problem will transpire on your watch is usually pretty effective for leaders until it's not. And we're now getting to that crunch period. It's difficult to convince, I think, either government leaders or business leaders to invest in prevention, because that's money that you're allocating away from all of the things you're already expected to fund. And in a time, again, in the UK context where the NHS, National Health Service, is underfunded, and that's people's top concern, to say we're going to be allocating resources for this, this emergency, which may or may not happen, is a difficult sell politically. And so to bring it back to the point of, that everyone in this conference is contending with, perhaps we have to appreciate that about leaders. If we're going to design solutions that they can work with, they probably have to be persuaded, not necessarily about the urgency, maybe, but the implementability, if you will, of it, and how they are maybe reducing their own downside risk.
The call to action I think Connor had in his opening on the company side of things was get companies to invest in prevention, right?
Yeah.
Basically use their CapEx to transition themselves in advance of the need to transition themselves, and let them do that, and don't penalize them from a valuation perspective. But that's the same thing that you see in investing, is they do get penalized for overspending in the short term to benefit something in the long term. People's time horizons are shorter. I think government's time horizons are shorter, even if it's less expensive now to invest in prevention to save money down the road. They're like, I might not be in charge.
That's right. Yes. But maybe, and perhaps this is a good note to close on, I meant to say when we were on stage, we have had so many aging leaders, certainly in the United States, but in much of the Western world. If there's a Harris White House, one of the things that's striking about that, in addition to her being female and mixed race and all kinds of other things, is frankly her age. She'll be a non-baby boomer for the first time in a long time. And I do think that the age equation will be very relevant for the work on the responsible investing agenda. Just, you having younger people who don't have, younger than 75, who aren't having a debate about whether climate change is real, I think, really, really changes the discussion.
Fantastic. Well, what a great point to end on. Tina, Wendy, thank you so much for joining us for this fascinating discussion. And thank you so much to our digital audience for joining us too and posing your excellent questions. That brings us to the end of day one. It's been an absolute pleasure to host you here, and we look forward to seeing you back here on this live channel tomorrow.